Welcome to ValueVest Daily. We've got a major situation brewing in the Caribbean, and it is moving fast. A military standoff between the U.S. and Venezuela is getting more intense by the day, and it's already sending some serious shockwaves through the energy markets. So this raises some pretty big questions for all of us as investors.
Okay, let's just jump right in. This is way more than just another headline from a faraway place. We are talking about a full-on naval blockade, oil tankers being seized on the high seas, and suddenly this new war premium getting slapped onto the price of oil. So the big question, the one we're going to tackle right now, is simple, but it is absolutely critical. What on earth does all this mean for your portfolio?
You know, to really get a handle on what this means for your money, first we have to understand just how fast and how serious this whole thing has gotten. So let's walk through the key moments that brought us to this boiling point, and believe me, it all happened in the blink of an eye this past December.
Okay, look at this timeline. It really shows you how fast this whole thing caught fire. It starts on December 10th. The U.S. stops just talking and starts acting, seizing a tanker carrying about 2 million barrels of crude. Then, a massive step, designating the Venezuelan government a foreign terrorist organization. Now, that FTO label, that is a huge deal for investors because it basically makes doing business with the state a crime, putting any company that interacts with them at risk of some really severe U.S. sanctions. Just 6 days after that, a total and complete blockade is ordered. And now, today, the U.S. has what's being called the largest armada in the Caribbean and is already hitting vessels with drone strikes. I mean, this is a full-blown military pressure campaign, and it's all unfolded in just a few weeks. So how in the world does Wall Street even begin to process a geopolitical shock like this one? Let's switch gears and look at the market reaction. See how all this military chest thumping is actually translating into dollars and cents. And really, the immediate impact boils down to just one word: volatility. And this right here is the most direct effect you're going to see. Oil prices, boom, they spiked immediately. Just the risk of that Venezuelan supply being yanked off the market has injected what traders call a war premium into the price. WTI and Brent crude shot up into a new trading range, somewhere between $55 and $60 a barrel. So this has pretty much put a new floor under the price of oil, for now anyway.
But here's where it gets really interesting. This is the core tension you absolutely have to understand. On one hand, you've got this short-term pressure cooker, right? The blockade, the seized ships, the fear, it's all pushing prices up. But on the other hand, the market is also looking down the road to 2026, and it's seeing a huge global oil glut, a massive oversupply. So that long-term headwind is acting like a lid, keeping prices from totally exploding. And what's the result? It's not a straight line up. It's wild, choppy volatility. It's a massive tug of war between today's geopolitics and tomorrow's global supply.
Now, you know how these things go. Whenever there's a big market event, the impact is never spread evenly. This crisis is creating a super clear divide, with some very distinct winners and some very distinct losers popping up all over the place. So let's break down who stands to gain from this and who's really feeling the heat.
This table here gives us a really clean map of the investment landscape. In the energy sector, it's a tale of two cities. U.S. shale producers, they're winning. Gulf Coast refiners, they're losing. And we'll dig into why in just a second. For defense, it's a bit more straightforward. You can see naval and drone contractors are the clear winners. Shipping is a mixed bag. Legitimate tanker operators might see their rates go up, but the risk for insurers and logistics companies in the region is just skyrocketing.
Let's zoom in on that split in the energy sector, because it's a perfect example of how complex this whole situation is. U.S. shale producers, think companies like Occidental, they are loving this. They have zero exposure to Venezuela, and they get to sell their oil at these new higher global prices. It's pure upside for them. But if you're a Gulf Coast refiner like Valero, it's a whole different story. A lot of their huge, complex refineries are set up specifically to process that heavy, sludgy crude that comes out of Venezuela. Now that supply is cut off, they've got to find other, more expensive types of oil, and that just crushes their profit margins, what they call their crack spreads.
Okay, so this brings us to the million-dollar question, right? The one that every single investor watching this is probably asking. Is this whole thing just a storm in a teacup for the energy sector, or could this actually be the thing that sinks the entire market? I mean, how serious is this threat really?
Right now, Wall Street is looking at this as a volatility threat, not a systemic threat. So what does that even mean? Well, it means the price swings and the uncertainty are mostly bottled up inside those directly affected sectors, energy and defense. The broader S&P 500 is kind of shrugging it off. But, and this is a big but,
That could all change in a heartbeat. Any kind of direct military escalation, let's say a Venezuelan ship actually fires on a U.S. vessel, that would instantly turn this into a systemic threat. It would trigger what's called a risk-off event, and you'd see investors just dump stocks across the board and run for safety.
And you know what? This quote from a recent analyst report just nails it. The blockade itself, the market can handle that. Venezuela is what, about 1% of the global oil supply? The real danger, the true black swan event that we all need to watch for, is escalation. A hot war, no matter how small it starts, would have consequences that go way, way beyond the price of oil.
So, how do you keep tabs on this risk? Well, here's your magic number. Keep your eyes glued to the price of WTI crude oil. If you see it break and hold above that $65 to $70 range, that's your signal. That's the market telling you that the risk of a bigger, wider conflict is going up. And that would be the trigger for investors to start getting a lot more defensive, real fast.
So, knowing all that, what's the game plan? How should you respond? Well, one thing's for sure. Panicking is never a strategy. So let's lay out a clear, simple, 3-step playbook for how to navigate this kind of geopolitical risk without totally blowing up your long-term goals.
The playbook is simple, and it's all about discipline. First up, stay informed and stay nimble. This story is moving quickly, so you've got to keep an eye on the headlines and, of course, that key oil price we just talked about. Second, think about positioning for this volatility. Now, this doesn't mean you go and change your entire strategy, but making a few small, tactical moves could be a smart idea. And third, and this might be the most important part, keep your perspective. For now, this is manageable noise. Don't let a scary headline make you overreact and ditch a solid, long-term plan.
All right, let's get into some specific ideas here. If you're looking to play this from a bullish angle, you could look at the winners we talked about, U.S. oil majors, shale producers, or even broader energy ETFs like XLE. A more speculative, long-shot bet could be on oil field service companies. I mean, if there's a regime change, those guys would make a fortune rebuilding Venezuela's infrastructure. Now, on the flip side, for hedging against that escalation risk, you've got the classic safe havens like gold, or for more advanced traders, strategies like buying protective puts on the S&P 500.
And of course, as we talk about specific tickers and ideas, it's so important for me to say that this is all for educational purposes. This is not financial advice or tax advice. You should always, always talk to a professional who knows your individual situation.
So, we'll leave you with this final thought. We live in a world where tensions are rising all over the place, and this crisis is just the latest chapter. So the question every investor has to ask themselves isn't how do I avoid risk, because that's impossible. But instead, is my portfolio ready and structured to potentially turn that risk into a calculated opportunity?
If you found this breakdown valuable, please do us a favor and take a moment to subscribe, like, and share ValueVest Daily. We're here every day to provide these kinds of insights to help you make smarter decisions with your money.
And one last thing, we really do want to hear from you. If there are any specific high-risk, high-reward situations out there just like this one that you want us to do a deep dive on, please drop it in the comments below. Thanks for watching.